If you're preparing for de-dollarization in a world that is increasingly moving away from the US dollar, I'm going to give you 5 easy ways to move your money out of dollars and into other currencies and assets to protect and diversify the money that you have. And none of this stuff has to be that complicated, so we're going to get right to stuff that seems pretty simple, but the devil's in the details. So let's get started. How do we prepare for what I call marginal de-dollarization? If you look at the amount of dollars used in the world, the global reserve system, since the turn of the century, the US dollar has gone from a 73% role to a 58% role, and we're seeing increasing marginal decreases in that. The world is increasingly sanctioned. 29% of the world's economy is sanctioned by the US. They have more power than they used to. They're pushing back. They're creating their own currencies. They're getting into alternative currencies. And so the US dollar, well, probably not going away tomorrow. This is not some conspiracy theory. It will become worth less as fewer people want it, as more imports are driven outside of the United States. As the world builds its middle class, the US and its currency will become relevant in a certain part of the world, but I don't believe eventually in entirely the world. So how do you get into other currencies? It's not really a matter of saying the dollar is trash and being done with it entirely. It's a matter of having a different portfolio of things. And so let's just start very simply. Some other currencies, even if they're not as strong as the dollar, may offer more opportunities to build freedom. They may offer you the chance to get a second passport by, let's say, opening a bank account and putting a bunch of money in there, or getting a residence permit that leads to a passport. So sometimes you're even willing to have a little bit weaker currency because you might lose a little bit of money, but you're out of the dollar. The US no longer controls you. Even if that money loses just a little bit of money in dollar terms, you've got a property in some other country. You've got a residence permit or a passport. To me, those are valuable things that when de-dollarization continues, you may not want to be around when the fur starts flying. You may want to have the opportunity to be somewhere else. And so we've seen currencies like the Georgian lari, the Armenian dram, and the Mexican peso recently appreciate against the dollar, even though they may not have always done so. So here's the first way you can diversify. Banks and brokerage accounts. Very simple. If you are in the United States, you're probably used to banking only in one currency. A number of English-speaking countries have that. Maybe they've got US dollars and their own currency. That's basically it. When you go to banks overseas, my favorite has long been Singapore, but Switzerland, Liechtenstein, there's a couple of international friendly banks in the UK, the Bahamas, the Cayman Islands are difficult, but some people may be able to get in there, and others. They're going to offer you 8, 10, 12 different currencies. I have a banker, he's like, hey, listen, we don't have that currency, but I can get it for you if you want. Like the minimum's like 100 grand. You can open a bank account at a bank in Singapore, for example. There's 3 big banks. There's a couple of other foreign banks. There's probably 2 or 3 that would open an account for you at any given time if you knew how to go and present yourself. We help our clients do this all the time. Sometimes it's just, hey, listen, here's the 2 best ones. We're going to have you go meet both and see which one works out. But once you do that, you can simply basically move your money from dollars using a service like Wise to move smaller amounts of money from dollars. Wise, formerly known as TransferWise, converts that into the receiving currency. You pay as little as like 39 basis points to do that. It arrives in your new bank account. If you're opening a smaller bank account like something in Georgia, for example, where they only want $5,000 or $10,000, they'll let you hold euros and pounds and Georgian lari. That's a cheap way to move it over because it's going to be cheaper than the bank exchanging the money for you itself. Once you get into higher value bank accounts like a bank in Singapore where you're talking about 6 figures or even 7 figures for the private banking options, I would generally move my US dollars over to the new bank and then simply convert that within the bank because you'll often get lower FX rates. You can also open brokerage accounts. And so if you open these international brokerage accounts, there's a number of them out there. You can not only trade stocks in like 30 different, countries, but they have some of the lowest spreads on foreign currencies. I exchange in my brokerage account sometimes, and I don't even think I get charged. I did a transaction recently. I'm like, I think they paid me to do that transaction. Small amounts through Wise, if you're opening small bank accounts overseas, like in a Georgia and Armenia, something like that. If you have a priority bank, you can do it there. If you've got a brokerage account, you can send money in through dollars, hold the money in different currencies, either invest it in the foreign currency, or eventually you could sell those investments and then move it out. So if you've got, euros or Danish kroner or whatever else, as long as you had a bank account to move that to, you can move it out of the brokerage once it comes in and gets converted, whether you invest it or you just send it out to your account that allows that currency to be held. So banks and brokerages, you can hold the money in deposits. Some of those deposits pay higher interest. The dollar is one of the higher interest-bearing currencies right now, but You can also, obviously, of course, enjoy just basic currency depreciation, and you can invest in stocks through the brokerage accounts. Sometimes with the banks, but generally cheaper through a brokerage account. So let's talk a little bit more about stocks. Number 2, I generally, even if my bank allows me to trade, if I'm going to be a serious trader, I'm going to have a separate brokerage account. So the banks in Singapore, I think, are somewhat reasonable on fees. Once you go to like Switzerland, they're going to charge you a lot, and the service just isn't going to be that great. They're going to charge you management fees. They're going to charge you execution fees. I just don't recommend it. You don't really need these fancy like private Swiss banks. It's more of just selling you on other stuff they offer that makes them a lot more money than just buying shares of OCBC Bank in Singapore, on the Singapore Stock Exchange. So you want to get a brokerage account. Unless you're just doing small stuff, you can use like an international bank account. For example, let's say you want to be in Singapore dollars. Singapore dollar is based on a basket of different currencies. So you can say that's a good thing or a bad thing, but you're getting diversification. Stocks there pay higher yields, and dividends in Singapore are tax-free. So depending on where you live, if you move somewhere that doesn't add a dividend tax, you can ostensibly, triple the yields that you're earning while having currency diversification. So I'm not a big fan of necessarily timing things. I have occasionally timed where, okay, hey, this currency is getting crushed. I believe in it long term. I'll open up as a position the same way Warren Buffett would say that he's going to, he loves when stocks go down because he's going to buy more. I did that with, for example, the Georgian lari during the pandemic. I bought it about 3.44. It went back to about 3, and then when all the Russians started coming in, it went up to about 2.5. And so if you believe in something long-term, I had knowledge of Georgia and what I thought would happen. Maybe Singapore is a bit of a safer bet for most people. You can convert at certain times. Obviously, there's not really a lot of Georgian lari denominated stocks, but like in Singapore, you can do that. Hong Kong dollar stocks, you're basically pegged in a very rough band to the US dollar. People like Jim Rogers would say, hey, what if one day it goes to the renminbi? You could have some substantial appreciation there. In the meantime, you can get pretty high yields on some of the dividend stocks in Hong Kong, and again, no dividend tax. So you've got a tax play, you've got a yield play, you've got a currency play, and you can choose how much of a peg you want. Singapore and Hong Kong dollars have some connection to other currencies, whereas others are not going to. With banks, with brokerages, with stocks, you can also use this to get a residence permit. So let's look elsewhere in Asia, Malaysia, My Second Home program, for example. You put $1 million ringgit in the bank, you get a residence permit. And so that currency hasn't done as well as some, but it is near some multi-year lows. There could be an opportunity there. If nothing else, you get residence in a tax-friendly country with great people. We're hosting Nomad Capitalist Live in Malaysia this September because I wanted to show people what an underrated place Kuala Lumpur is. And we're going to be talking to people for 4 days about all the stuff I'm sharing with you here. If you want to hear the specific bank names that we don't talk about because they don't want their names blasted all over YouTube, if you want to hear people who are actually investing in stocks in Asia, who are investing in Latin America, they're all going to be on our stage at Nomad Capitalist Live. You can go to nomadcapitalist.com/live and check out all the speakers. But if you want to hear exactly how to put this stuff into order in a way that we don't want to be giving people financial advice or naming specific banks that don't want to be talked about, come to Nomad Capitalist Live and your head will explode, is what I've been told by everybody who's come in recent years. nomadcapitalist.com/live, and we'll be talking more about this. What you'll also see is, do I want to get an MM2H? Now, there's an income requirement in Malaysia now that's just not exactly low. But you put money in the bank, you get a residence permit. Next door in Thailand, you put money in the bank or you buy property, you get a residence permit. I'll come to property in a minute. But you're basically just putting money into an asset and you can get residence. In a country like Turkey, you can get citizenship. Maybe not a currency that you want to be in, but if you buy property, it has really kept up with the US dollar very well. Stocks, brokerages, and banks, higher yield in many cases, whether it's, whatever you're doing, potentially better tax situation, currency diversification, control your entry point, and in some cases you can plant a flag and diversify, get yourself a second residence or get a passport. Let's talk about number 3, debt, one that people don't think about as a lot, but we have had clients over the years who like investing in things like peer-to-peer loans. They like buying debt. Obviously, you can buy government debt directly, and so if you have that Singapore bank account, you can buy Singapore savings bonds. Perhaps you think that the government of Singapore, one of the last great governments that truly honors its word and runs a tight ship, maybe you think they're better. Now, you can only put 200,000 Singapore dollars into Singapore savings bonds, but there's other kinds of Singapore government debt you can buy as well. You need to have a Singapore bank account to do that. Obviously, you can buy other kinds of government debt directly. A lot of these banks will offer various, debt funds. If you want bond funds, if you want, government debt, high yield, they put that together. And so in some cases, if you want to invest, I was talking to a friend of mine. He's like, I have some great stocks in the Philippines and Thailand and Indonesia. Those are hard markets to get access to. But if you have a priority or a private bank in Asia, and that can start from a couple $100,000, like let's say in Singapore, they will put together funds of those stocks, which are very in markets that are difficult to access. And then you can just enjoy the benefits of that. So I've got a Thailand fund. It's done all right. It's not done as well as Indonesia or India, but those are harder markets to get into. I think like an Interactive Brokers, you have to be an Indian resident to trade most Indian equities, but you can own the fund in a Singapore bank. But anyway, back to debt. That's obviously government debt and debt funds, what have you. Peer-to-peer sites. So, in Europe, obviously the euro is not a huge diversification piece, but, Peerberry, Lender Market, Esketit, I think is what it's called. But those are like peer-to-peer sites in Europe. So they have those in the US if you want to be in euros. But some of these peer-to-peer sites, I have not checked any of those, by the way, but they've been passed along to me. You can also get into Czech crowns, Hungarian forint. I've seen some like, Kazakhstan based. I'm not sure that the Kazakhstan currency is that strong. I've seen some that are in Georgia. And so some of these places, I mean, they'll pay you 13% on making consumer loans. Obviously, the consumers are being charged a lot more than that. So they'll offer a buyback guarantee. Do your own due diligence on how you see that. But if you would have, made a loan at 13%, in Georgia, for example, you could have seen equal currency appreciation. Now, you could have just put your money in the bank and made 11%, and maybe you like that better. But if you like investing in debt, you can do that in Diversify, not only to euros, but in some of the more exotic European currencies is generally where they are. I've not seen those, but maybe the guys from Latino Metrics will be talking about how you can buy debt in Latin America. They'll be at Nomad Capitalist Live. Number 4, real estate. Obviously, some countries do base their property. In Serbia, for example, it's generally sold in euros, even though the currency is the dinar. In Georgia, it's sold in dollars, even though the currency is the gel. Some countries, obviously, like Ecuador we've talked about, the dollar is their currency. So if you can find a country, like, for example, Mexico, you can buy property in Mexico. The peso did go up recently. Thailand, same kind of story. There could be a geopolitical play there. There could be a lifestyle play. Both nice places to live. You can potentially earn decent returns in some of those places. And you're in a different currency that is really in a different world than the dollar, the euro. They're in their own, different universe. I think they're both increasingly moving a little bit away from the West, not being enemies, but saying we're going to do our own thing. That could have been a good play to make in property. My property in Serbia has nearly doubled, and so I have exposure to the euro because the property would sell in euros, but I'm not in the European Union. So that's an interesting thing to have as well. Obviously, the opposite of that would be, some of these peer-to-peer lending sites where Polish zloty would be another one, by the way, Czech crowns. You're in the European Union, but you don't have the euro. So there's two different plays you could make there. And then there's peer-to-peer real estate sites in Europe. Again, one that was suggested, I have not checked it out, Reinvest24. So you can play it through peer-to-peer real estate sites. You can play it through just buying property directly. Not as many syndication funds in some of these countries, and I generally wouldn't want to do that. I would want to buy my own stuff. Obviously, our friends at InvestAsian do a project in Cambodia, but most of the other ones I have not found very interesting. I would just buy my own property. And again, Ecuador, Turkey, Thailand, and many other countries will give you a residence permit or even citizenship for doing that. Here's the last thing, number 5. You can buy hard assets, obviously. They may be denominated in dollars, but what we see is a lot of guys offshore. You want to pay in Bitcoin. You want to cash out in Bitcoin. You can buy precious metals. You can store them offshore. In some countries like the US, it may be legally, in some cases, non-reportable if you're holding physical precious metals vaulted somewhere else. People say, well, don't I want to grab them and take them with me? No, you want them to be where they're safe, where you can go to them. Have the second passport, be able to go to your stuff, and then you can sell it, and then have the bank account where you can send the proceeds, or the crypto wallet where you can send the proceeds. Obviously, Bitcoin, crypto, what have you, I would have some in a hard wallet, and I would put it somewhere in a safe deposit box, not in the bank, but somewhere else overseas. Or if I had to go and get it, I could get it. Maybe that's not everything I have. Maybe I have some precious metals, I have some crypto, but I would keep some overseas. Some people may need to report that, but often when it's physical, it's exempt from reporting legally. And what you also might want to consider with that is, do I want to hold these assets in a corporation or an offshore trust? Sometimes harder for crypto, but for estate purposes, considering, they're in different places, I might want to put stuff in an offshore trust. I might want to put any number of these assets in an offshore trust. The best bank accounts, in my opinion, don't deal with trusts. So I'm going to have separate bank accounts for my trust and for me. But brokerages deal with trusts. Real estate can be put into trusts. Oftentimes, you need a local holding company in the middle. The debt can, in many cases, be sold to other trusts or a subsidiary corporation. Hard assets, real estate, debt, stocks, banks, and brokerage, all those offer chances to get out of the dollar and hold other currencies through those different assets that could have their own appreciation, have their own yield, perhaps higher than what you get where you live, but you're diversifying out of the dollar. And if things get worse for the dollar over time, you will have an edge. It's something we help our clients figure out at Nomad Capitalist. We make holistic plans where, again, you open a bank account, that becomes a residence permit. That eventually becomes a citizenship. Once you have the citizenship, how does that help your taxes? This stuff all works together. If you have $1 million or more and you would like to learn how we can help you as a client, nomadcapitalist.com. If you're just trying to figure out how all this stuff works, Nomad Capitalist Live this September in Malaysia, we're going to be discussing the specifics that literally we have banks saying, hey, please don't mention our name on YouTube. We'll open you an account, we'll talk to you, we'll help some of your clients, but please don't talk to millions of people. We can talk about that in some cases, and we do give more specific examples in person. That's why there's no recordings available. You got to come in person, Nomad Capitalist Live.